Hey guys, welcome back to another Trading Edge video. If you're brand new, my name is Akil Stokes. I'm a trading coach at tier1trading.com, and this is a weekly video I put out for you guys showing you what's on my radar for the week ahead. Hopefully you enjoy. If you do me a favor, hit that like button and subscribe. That way you don't miss the next video and the random videos that I put out during the week as well. We had two this week on a few big trading ideas. We're going to start here this week with the Euro Yen, and we're looking for a potential reversal trade here, maybe two types of potential reversal trades here in the Euro Yen. Now, just giving ourselves some perspective, I'm going to hop out to the daily chart right now. We're going to have an idea of where the Euro Yen is actually trading at. Again, one of my favorite tools, a very underrated tool, if you can even call it that, is going to be a drawing tool. It's going to be the horizontal line, right? I am big on identifying levels of structure and key levels that the market is either at or the market is going to. So by simply drawing out a line like this, it allows me to look back and see if we are at any relevant level. You can see we're above a previous relevant level there, but if we keep going back in time, you're going to see, okay, well, we do have something in here. And if we zoom in, we're going to see that it's our next level of previous structure resistance from way back in 2008. Now you may be asking yourself, what does a structure level in 2008 have to do with what's happening now in 2023? Well, following up on the lesson that we did in our Monday Q&A session, this is our last level of outside structure, right? We have recently broken our previous levels of outside structure. This is our last level of outside structure, meaning unbroken structure, which means it's going to be a very important level despite it being back from 2008. So you can see we're trading right at this level, which you can look at it being like a ceiling, I guess you can say, or a temporary ceiling. So we don't necessarily want to jump or buy when we're close to the ceiling. So what I'm looking for if I'm on the buy side is a violation of that level, and we can worry about that if it happens. What I'm looking for right now, trading wise, is going to be a selling opportunity. Now, a few things are happening here. One, we could have a double top, depending on your definition of a double top. It is not going to be a double top for me, and I'm very specific with what I look for in double top, so I'm not interested in that. So I'm looking at a longer play potential reversal here, maybe in the sense of like a head and shoulders, so something like this would form, where price action has made our directional move up, a little bit of a retracement, a little bit of an extension, right? And we could have two heads, right? Double-headed head and shoulders exist, but essentially what we're looking for is a move back down to this neckline right here, and either a straight violation of this neckline, which would serve the same purpose, or maybe a little bit of a bounce up before heading down like that. So a longer term play, probably something for later in the week, but something that can certainly be on the radar. Something else that could be forming as well, and another type of counter trend move in an opposite direction, would be a potential advanced pattern formation, right? This last extension up right here, this would be our X to A. This retracement right here would be our A to B. I can take my Fibonacci retracement tool out, measure it from that X leg to that A leg. I can see that I hit the 618 Fibonacci retracement, which puts me on Gartley pattern alert. I can then bring out my Fibonacci extension tool, measure that from my A leg to my B leg, my swing high to swing low, and back up. And I know that if price action were to come back down to my 127 Fibonacci extension, that is going to give me a bullish Gartley pattern, right? And again, all this may work together, right? It's not just one idea or the other idea. These two things can work together. Maybe we come down here, maybe we bounce up, maybe we still get that violation, which means there could be a buying opportunity here, and then there could be another selling opportunity if we break it, right? We never know. But what I'm trying to do as a trader, especially in the weekend analysis, is give myself options, write down those options, and that way, whatever the market decides to give me next week, I'm going to be prepared and I'm going to know how to take it. Next up is the dollar yen. This will be short and sweet. I did a video during the week on this pair. I think it came out a day ago or so, maybe a Thursday, I think it was. But we're looking for a big continuation here. You can see that our ultimate destination is all the way up here about the 145 even handle. We're trading right below the 144 even handle, so a lot of room. And we're looking for the same thing we were looking for earlier in the week, right? You can see some of the notes here. We had a new structure high. We were looking for a pullback and an extension. We didn't really get a pullback. We got really kind of just sideways action before the next explosion up. So now we're just looking for the next pullback, right? And if we go down to an hourly time frame, for example, you'll see that that consolidation actually gave us a nice little shelf, right? This area right in here. So we may see the same thing. We may just see a straight, another high and tight flag and explosion up, which is tradable as well. But we may also see a little bit of relief or retracement back into this area before giving us the next opportunity to continue higher. So essentially, bullish trend continuations are still on our radar here until we get to that 145 level. After we get to that 145 level, or if a important level of structure is broken, that's when we reassess and reevaluate the situation and see if we have a change in perspective. But looking for longs here on dollar yen. Speaking of continuation, the dollar Canada, the loonie, has a continuation set up as well. This one in the opposite direction here. You can see we had a pretty nice end to the week. Last week we ended up breaking and violating our previous structure shelf right here, and that since we did that, we've been looking for continuation opportunity to the downside. Where do we think price is likely to go to? Well, we think price is likely to come right down here to this $1.30 level. You can see this previous level of outside structure right here. And we had a very good end to the week. You can see the bulls trying to push up. Bears rejected it a little bit and giving us a nice little pullback opportunity. And this is going to be clearer on the lower time frame. In fact, we had a nice little lower low, lower close if you're a continuation trader that you can get involved at market if this is your type of entry, right? But essentially in these pullback trades, and it's going to be like a broken record. If you're new, this is probably exciting. If you're old, you're probably like, yeah. But again, trading is not about being exciting. It's about being consistent. I spoke to a trader the other day who was having struggles with consistency. He was like, hey, I'm a day trader. I have these really good days and weeks, but then I have these bad things. I'm always up and down and up and down and up and down. And one of the first questions that I asked him, I said, hey, well, do you have a trading plan? He was like, well, no, I don't have a written trading plan. I'm like, well, that's probably one of the reasons that you're inconsistent. When you don't have a trading plan, you don't have a guideline to what you're supposed to be doing. And that means you're probably doing different things on different days, looking for different stuff and taking it in using a different approach. And well, my rule of thumb is consistent analysis plus consistent execution equals consistent results, meaning that if you consistently look at the markets the same way, you have a process and you're looking for and valuing the same things each and every time, right? Then what you're doing is you're putting yourself in position to extract your edge. And your edge is something that has been tested and proven to tell that you have an advantage over the market. The execution part is actually doing it. That's a little bit harder. That's dealing with the emotions and pushing the trigger and not moving stops back and taking targets early. All the funky stuff that goes through our brains, which is a completely different story. But you need both in alignment, that consistency to be a successful trader. And if one is not in alignment, the whole thing kind of collapses. So you look at this stuff and it's like, well, Keel, I tune in, I see the same type of setups. You talk about the same thing in the same way each and every week. And you've been doing that for like 12 years. And like, yes, that's the point. Because it works. It hasn't stopped working. I don't care about excitement and shiny stuff and the next kind of big thing to get you pumped up and sell you something. I care about teaching you how to trade, and that's important. Speaking of which, I got a podcast coming out Sunday night, Monday, which you're going to enjoy. It talks kind of on this topic about there was this big trading scam that was just kind of busted, and we talk kind of about that and give you some tips on how to avoid it. But it's one of those things where people get caught up in all the flashiness and the 473,000% return. And before you know it, you got yourself in a bad situation. So make sure you check that out. Trading Coach Podcast. Again, it comes out technically Monday, but you guys know I release it the night before or 12 o'clock UK time, whatever. Anyway, back to the point here. We have a extension here. We have a pullback here. We have a lower low, lower close, which gives us a fresh break, restarts the process. And then we have our next pullback here, followed by another bearish candle, another lower low, lower close right here. We've been doing a lot of work with the RSI. Something that I love to look for in continuation opportunities is divergence, but not your typical divergence. So in a counter trend setting, you're looking for kind of regular bullish and bearish divergence. In these trend continuation settings, what we're looking for is what's called hidden divergence. And that term is used differently depending on where you're going to. But essentially what we're having here in the price chart is we have a series of lower highs. But on our RSI, we have a series of higher lows. So again, the divergence is when the indicator shows us something different than price action. So a nice bearish continuation opportunity here, just like dollar yen. You can still look for fresh breaks, right? If you don't have an opportunity to get involved at market here, or the market doesn't give you what you need, there's still room. We're looking for $1.30, which is all the way down here. So there's still an opportunity for this bad boy to maybe break again, come back up, and then get one last continuation down. Now, momentum is starting to slow, which is telling us we're probably towards the end of our move. So keep that in mind. But also don't let that deter you from taking a valid signal if it were to arise. All right, so next we're going to go to the Aussie Canada. We're going to take a break from our trend continuation opportunities and look at a counter trend trading opportunity. We're speaking of divergence here. Here's a good example of how nothing is the say all be all. Going back to the podcast topic, I was teasing you guys about one of the things that was sold in that podcast topic was like, or the scam that was going on was like never had a losing day, and it follows up on the impression that some traders have where it's like everything is the say all be all, where I have to win 100% of the time, or this signal worked 100% of the time. Here's another example of divergence, or what was divergence, right? We had a loss of momentum pattern here, trickling bearishly on our chart. We had some bullish divergence here on our RSI, which typically is a sign of relief, or you would expect relief. And this even occurred at a previous level of structure. Look left, structure leaves clues, and the market still went down, right? So sometimes you can have the best signal in the market. Everything lines up, the stars and the moon are in alignment, and it still loses, right? And vice versa. Sometimes you can have a horrible signal and still win. And that's how a lot of traders do dumb stuff, get lucky and win, think they're great, and then end up blowing money because they start risking too much and have this overconfidence. But it's also how good traders can get discouraged because they don't understand that, hey, even though I can do everything right, I can still be wrong. And again, that's the mental side of trading that has to be mastered. What we're looking at here, though, on the Aussie Canada, as we bounce out to a daily chart, is we are trading at a previous level of structure, right? We spoke about outside structure. We are coming down to our most recent level of outside structure, right? If I have my Ninja Trader charts up, it'd be a nice little VS1 zone. Keep an eye out for a little bit of relief, right? A little bit of profit taking from the bears, a little bit of pushback from the bulls. I mean, think about it like this. We have nosedived, right? And we noticed because we've been watching this for a head and shoulders, which never happened. But we have nosedived for the last 1, 2, 3, 4, 5, 6 days in the market, right? A straight move from 91 down to 88. Think about, put yourself in the shoes of a trader who got short up here, and ask yourself the question, where would you be taking profits at? It doesn't have to be your full profits, but maybe partial profits, right? Well, you're probably eyeballing this level right here, at least to take something off, right? So if you are eyeballing that level and you're looking to take profits off as a seller, you're looking to buy, which means you're going to start flushing some buy orders, some buy limits right in here. You got to think there are other buyers interested in that level as well, because it's a previous level of structure. And we can tell by the clues that our candlestick and our candlestick combinations give us that there was buying interest in the past. So you have buying interest from previous sellers, or older sellers. You have buying interest from newer buyers, right? You have less sellers active in the market, because I don't know about you, but I'm not interested in selling right at structure. I would prefer to sell up here, obviously, or wait till we break. So we have less selling pressure in the market when we have more buying pressure in the market. And it's going to sound weird, but this is how I always look at the market. It's a battle between buyers and sellers, supply and demand, whatever you want to call it. And it's all about which is going to overtake which. Like, where is this balance at? Are the buyers outweighing the sellers at any given moment? Where is that imbalance? Are the sellers outweighing the buyers at any given moment? Where is this imbalance? That is my perspective on the market whenever I look at support and resistance, supply, demand, even individual candlesticks. And understanding that helps me kind of get a better perspective and create a story around what's happening in the market. And for me, it just allows me to be more confident in my trading and really pick out key positions. I don't know if it's necessary. I've always considered myself a little bit weird, but in sharing that with the traders I coach with for the last like 4 years, and I was very scared to put together a course on that. But the response was very, very well. And it seems that it helps increase the edge when you can look at it in a way that makes more sense than just looking at kind of candlesticks on your chart. So give it a try. If you don't already, if you don't understand it, just let me know and we can talk about it. But potential buying opportunity here down at previous structure. Again, this is a counter trend trading opportunity, so we're just looking for a little bit of relief. We're not looking for anything drastic and a move back up to 91s, just kind of a in, out, rob the bank, get what we need, and then get out before we get caught here. So something to keep an eye on as the week opens up as well. Aussie yen, we had a bear flag pattern. You can see the notes still on our chart from last week. And we ended up getting a break out of it, but not a really kind of a big break, a small break out of it, and now we're retesting. So typically in a situation like this, I'd be looking for a retest of the flag pattern, right? A pullback trade after the confirmed breakout. But I tell you what, we look at the daily chart and we came to a very interesting level. I'm going to delete this real quick so you can kind of get a nice look at price action. And you can look at the hold that we put in, right? So what did I tell you earlier? One of my favorite tools, horizontal line tool. We just put a horizontal line tool right here and then we look left. You're going to see that this hold came precisely at our previous level of structure, which is very important. This is where we would expect price action to come to if we were going to see some type of pullback. So instead of looking for a pullback trade right here at this level, I would want to see this, right? I would want to see confirmation that we can actually break beyond that level we looked at on the daily, give ourselves a fresh break here, and then look to catch the next pullback down. Because if we can catch that next pullback down, right, we have a little bit of minor structure right here that could be a little bit of a nuisance, but hopefully this is maybe broken in the next extension down. But aside from that, looking at the daily, we would have clear sailing here all the way back down to this next inside level of structure right around here. Let's call it 93 even. So there's a lot of opportunity trading from 95s and 93s here, but it's a little bit of an interesting situation because again, we did hold this level. So I want to see a little bit of proof that this level could indeed be violated before looking for any type of continued shorts down here. So keep an eye on Aussie yen. And of course, you could get involved in the pullback as is, right? This is it's a flag pullback, break and close below, pull back into, that's fine. I'm just saying if you want a little bit more confirmation, wait for that next break and wait to see if that level in the daily could be violated first. So that's it for this week, guys. Before you go, remember, hit that like button, subscribe if you're new. Make sure you check out the rest of the channel. Lots of content on here. If you are a newer trader, I highly recommend checking out the Trader Coffee Break series that Jason Grayson and myself do. We talk about a lot of topics that aren't sexy and therefore aren't talked about on the internet, but are extremely important to your trading. And of course, make sure you check out the Trading Coach podcast. We do have episodes here somewhere on the YouTube page, but they're available 3 times a week on your favorite podcasting app. The podcast is for you, by you, meaning I'm taking the subjects that you guys want to talk about and I'm turning them into episodes. So if you ever have a question or something you want to be discussed, I can't promise I'm going to discuss all of them because I get a lot of messages in and some of them just aren't kind of worth making in the podcast, but don't be shy about shooting me a DM, shooting me a message, and let me know what you want me to discuss, and I'll see if I can put together a podcast episode. All right, until next week, plan your trade, trade your plan, enjoy the rest of your weekend, and good luck in this upcoming week of trading.